What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol AAPL for Apple Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talked about it yesterday as it was making this really impressive rally from the FOMC announcement, but clearly giving that back and more on today's session. Now, this is relatively weak compared to what we just discussed in something like your Amazon, where we actually supported well above the low end of the FOMC rally. So do note that Apple is exhibiting relative weakness compared to some other large cap tech companies, okay? And that's noteworthy considering that it's been the relative strength monster for oh so long. So it's not the end of the world, especially if you're long from like 150. Again, this isn't a call to just say, sell the entire position, but it is to say that maybe you should start paying attention and tightening up your stop loss. The reason being is that we have a high, now we have a lower high. We also have a huge bearish engulfing candle, right? We've essentially engulfed the entire range from the Wednesday session and closed fairly weak down below the lows of the prior 2 days. The other thing I would start to point out is that this is not something where we're going to look for shorts to actively make money on the downside, but instead watch for a little bit further lower and then see if we can get some reversals at the prior all-time high and the support trend line here inside of Apple. So what I would watch for, quite simply, is can we get a hammer candle that's underneath the lows of today's session, okay? So a lower wick that does produce a new lower low and comes into the support trend line or sort of around that area here, close to 170 with a higher close, right? That's very important that it is lower than today's session, indicating that there was breakaway trend to the downside. Now, if we flip long over those highs, what's the target going to be? Well, I would start to argue from the 30-minute perspective, it's not so much about the 173.80 level anymore. It's really about this double bottom, which was resistant into the afternoon 30-minute session here. You can see a bit of an inverted hammer there, right? So that's going to be at 172.47, call it 172.50, knowing that Apple does really like those whole and half dollars. So in my estimation, again, pullback buys are the play here instead of actively trying to short the pullbacks because you never know where it's going to turn. Remembering Apple is the overall relative strength monster. Want to reiterate that. Now, if this area goes, right, if this all breaks down into next week, then it's all about 164 quarter. And remember that that level, if I scrunch up the chart, is really being produced not by cherry picking highs, so this in here and just going horizontal with it, but instead looking at this inflection point, this resistance, this inflection point, sort of a hold here into the end of day. Don't get me wrong, obviously we gap down the next day, but ultimately resisting at it there, holding it here. So I think there's a lot more credence to 164 quarter instead of blindly trying to just go off of that high from in here, just sort of explaining where that level is coming from. But if we get down there, again, from a daily perspective, because it would be a break of a support trend line, be on the lookout for a pattern that develops, right? You don't want to just blindly buy it on the first touch, would probably require a pattern, again, because we did break the support trend line. So a double bottom break of the neckline takes you back higher, some sort of inverted head and shoulders, fake break of that level, then recapture. Again, neckline break takes you back higher. These are all the things that I would be watching out for at and around 164 quarter, 164 even. Anything more aggressive than that is the primary support trend line, but I don't really know if that'll be in play at least into tomorrow or early next week. We'll, of course, do an update on the chart if it is going to be in play, but for now, really going to leave it off at the 170 area and then 164 quarter if the move is lower in the first place. Any sideways consolidation, pretty tough to get involved inside of Apple here. I would really be patient and wait for a potential break back up and over that 176 if you're going to get back involved. Now, don't get me wrong, day trade scalps can be had in here, but from a larger structural perspective, I think the easier long, the better long for risk management, and again, more of a swing trader style would be up and over that 176 to be in a more favorable environment to return up to these highs closer to 182. That's going to wrap up the video. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.